Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and let's get started with a reminder that the XRP Las Vegas 2026 is on. The tickets are on sale. You can go to xrplasvegas.com. It's going to be April 30th to May 1st, 2026. Everybody's going to be there. I'll be there. I made my wife go last year for the first time, and she said she doesn't want to miss it after going once. It's going to be at Paris, Las Vegas, which is kind of an upgrade to MGM. It's going to be nicer, bigger, should be wild and interesting and informative. It's in 162 days. Go to xrplasvegas.com to get tickets, and you can get after party tickets. I think they have packages where you can get a bundle for a discount. So go check that out. This is another clip from my interview with Jim Bazzani over at Caleb & Brown. He's recapping what happened on October 10th when we had the flash crash. And so I wanted you to hear this because this is very interesting, and it really illustrates what's so great about Caleb & Brown. Having a broker is everything. He tells you why right here.
Quite stressful, to be honest. It was a very eventful day. It was actually early morning here in Melbourne, Saturday morning, and we had a lot of our traders on. All of our brokers jumped on their books because we were getting, I think, 10 emails a minute. So as you can imagine, we had a lot of people looking to enter into the market, which makes total sense, right? It was probably the most volatile day we've ever seen in crypto, and we were able to operate seamlessly. So we had no downtime with our platform. But regardless of whether our platform had downtime anyway, we were still able to execute trade via email, which I think is a really big differentiator for what we do versus, say, an exchange. If the exchange has downtime, you can't access your assets, you can't make trades. Whereas with us, and unfortunately, a few days later, AWS went down, which meant two-factor authentication wasn't working, which meant the clients actually couldn't log into not only their Caleb & Brown account, but most applications. Clients were still able to get trades done because they could email their broker. So that's the benefit of using our service, is that you'll always have access to your assets. You'll always have access to make trades. So that was a very stressful day for anyone that held a large position in crypto, because all of our portfolios went down probably 20, 30% in a really short period of time. But it actually acted as a really great buying opportunity. And most of our clients were able to exit into really great positions with assets at really great prices.
I knew some people that got in, that sent that email he's talking about and made trades at the very bottom of that, or close to the bottom of that flash crash. I think I missed it. I didn't have my money positioned at that time, and so I think I missed it by a day or two, but I did send that email myself. I did buy the dip. I just didn't get it the great prices. I know some did. But I love having a Caleb & Brown account for that reason. I've had nothing but good experience with it. They are a partner. You can go open an account at xrpwealth589.com. Then it forwards you to my page on Caleb & Brown. You just click sign up today. The XRP at least is rebounding a little bit. We're at 221. I think this morning we were down at 217-ish. We had just as a reminder, we had a Cloudflare. Had a global outage, and that affected X. It affected all kinds of websites. Just about everybody on the internet was affected, and so it was glitching out and all kinds of things. And one of the things I tried to do in my last video, I was trying to show you this video while X was glitching out. So I want to show it to you. It's important what this guy's saying. He's from Citibank.
In your note, Dirk, correct me if I have this wrong, we're trying to find explanations for what's going on with Bitcoin. Were you pinning that on tightening liquidity?
That is one of the explanations. So there are a couple of things going on in Bitcoin that are interesting. First, there was a flash crash in early October. And that, for Bitcoin itself, it was a 14% move down over 2 days. Maybe not that drastic, but some of the altcoins really got sold much harder. And after this flash crash, we saw that the flows into the Bitcoin ETFs and so forth really changed. So the flows really never recovered, and so retail was apparently somewhat shell-shocked by that day, and we saw outflows. The other thing that happened is that I think a lot of the institutional investors trade Bitcoin with a bit of a trend-following mindset, and so we broke some of the moving averages that they tend to look at, and that is also reducing the source of demand. But the third point is what you were mentioning, and that is that the liquidity, which we measure by bank reserves on the Fed balance sheet, dropped by a bit more than 500 billion. And that happened because the Treasury increased the Treasury General account at the Fed by selling a lot of T-bills. And there were two reasons for that. One is why this TGA account was so high. One is that that during the government shutdown, the Treasury didn't spend as much, so that account rose mechanically on the back of that. But secondly, they did sell more T-bills than is typical, and so we are thinking going forward, the liquidity squeeze, so that explanation for the Bitcoin weakness should actually get much better, because we expect TGA to at the very least flatten out and probably decline, meaning bank reserves and the liquidity should improve between now and the end, partly because of the reopening and partly because the Treasury sold so many T-bills already.
Okay, then we got this. This is great from Raoul Paul. He's so right. I've been through so many of these folks. Wanted to put the current sell-off in perspective. Bitcoin corrected in 2024, 32%, 2025, 32%. Right now it's around 28%. This is normal. You've lived it before. Solana corrected 47, 67, currently 48. SWI corrected 69 in 2023, 79, 2024, 68, 2025, 64 current. Technicals are flamboyantly oversold. Sentiment is in the shitter too. Worst I've seen it this cycle. That is perspective. But here's what the smart money's doing. This is Dave Portnoy from Barstool Sports.
Now, am I eligible for this? Because here comes the announcement. Last night, Monday, November 17th, if you want to look at what I did, here it is. I hope I'm not giving away nothing. I probably am, so I probably shouldn't show it. 638 bought $500,000 of XRP. 637 bought 400,000 of ETH. 637 bought 750,000 of BTC. 636 bought 500 more or a reverse of XRP. So in total, last night, $1 million of XRP, 400 ETH, 750 of BTC. Blood in the streets. Dave's like a piranha. Dave's like a great white. He's just shark on fins. Oh, you know what? Let's do it. And we I know we can't clip it. We can't play music. So it's too bad. This will. See, I want to play fins, but I can't play fins if they clip this, because then the music companies. Anyways, fins to the left, fins to the right, BTC everywhere. So we had a crypto, a little dip in the market. I've been hold, Braveheart, hold. Last night, I went. So I bought $2 million worth of crypto, $1 million of XRP, 750 of Bitcoin to add to my collection, and 400 of ETH. So I don't know, that's 2 million. Did I just get 2 million entries into this content?
No question. That's the kind of moves I like to make. I wish I could make moves as big as the one he just did, but not that big. Now, Dom Kwok has a great write-up on his thoughts on the market for reading Nor the Flaccid Naysayers. Everywhere you look on X, people are throwing in the towel. People are asking me if it's all over. Sentiment's so bad. Some have tapped out completely and sold all their coins. Meanwhile, the mainstream media can't get enough of saying that crypto is flat on the year, back to where it was since Trump got elected. All positive catalysts from ETF launches to stablecoin bills, strategic crypto reserve have been announced, yet crypto can't seem to go higher. So what's going on with, and why are markets more flaccid than a maxi pad looking for master stock chart? In short, people are tired. The market's reflecting their exhaustion. Institutional capital, aka big money, has flowed into AI's sector, and endless launches of DATs has fatigued investors. Crypto is a forgotten stepchild. On a macro level, trade deal, Fed policy, uncertainty are weighing on price. Since price dictates sentiment, we're witnessing a vicious downward spiral of the two. So what's next, and what do we look forward to? Everything, in fact. You've heard it over and over again. But we really are still so early. After all, only 7% of people globally own crypto. The blockchain was not created to be an online casino for people to gamble on speculative tokens. It wasn't meant to make millionaires overnight, despite what some might want to believe. It was built to let individuals transfer funds online without the need for a middleman like a bank, and its use cases have already expanded far beyond that into financial services, supply chain, healthcare. Out of this storm, the rays of utility will start to emerge. Meme coins and VC pump and dumps with no real purpose will sink to the bottom of the crypto seas, and the top projects that build on blockchain's original promise will soar to new highs. Banks will use their technology. Multi-billion-dollar Manhattan skyscrapers will be tokenized on the blockchains, and everything around you eventually will come on chain. Just as nearly every device today, from your phone to your car, your smart fridge, is connected to the internet, so will every device over the next few years be connected to the blockchain, and the legislations are finally here for that to happen. Long-term believers will be rewarded. As the Oracle of Omaha says, if there's blood in the street, I'm not selling, I'm buying. And that's how I look at things too. Very good write-up. Here's Coinbase's head of institutional strategy.
You have more different types of investors. Obviously, the ETFs have brought in a flood of retail. You have more institutions. Harvard Endowment announced they hold more Bitcoin than gold the other day. So mathematically, that's what you would expect. It doesn't feel that way, to be very honest, right? The sentiment is brutal right now, and you have to be very, very honest about that. Just like I'm sure, you're holding gold, you feel smart. You didn't feel so smart in 2008 when gold lost a third of its value.
For years and years and years, you just felt average.
Feel smart.
Yeah.
Right? So as we've said many times on this show, trying to market time any volatile asset can get you in a lot of trouble. If you've systematically invested in Bitcoin over a 5-year period, you're up an extraordinary amount. Even year to date, while not great, both Bitcoin and Ethereum, while slightly negative, Ethereum's a little bit up. If you stake your assets, you can earn a higher yield. So you're still net positive. Solana's down materially for the year, 25%, year on year, 41%. However, we had the single best ETF launch of the year for a Solana ETF. So in these situations, I try to step back and ask myself, what has fundamentally changed since, let's say, late September, when everyone was incredibly bullish? And the answer for me is nothing. Structurally, we're where we were, if not better. We have the Czech National Bank announcing a central bank Bitcoin purchase, the first Eurozone country to do that. You've got Citibank and JP Morgan announcing stablecoins that they're using to facilitate customer transactions. You've got Harvard Endowment's announcement. You have successful ETF launches. So it's a challenging environment currently, but in my house, we like apples. I don't like apples less when they're on sale. So if you like this asset, you should like it at a discount.
What if you didn't like it in September and you like it now? Should you like it now at a discount? Because price does matter. I know you're sort of suggesting prices don't matter at all.
If you like it because you thought it was overbought.
Okay, we're going to go into DAIXRP.com. Got a lot more. That's the Patreon. If you'd rather join through YouTube, click join below any of these videos. If you'd rather join through X, hit subscribe. We do the full video and the extended video with no commercials. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. Here we go.